Hi friends, this is Fayaz from tradingtowealth.com. The stock we are looking right now is eudcom. Its recent swing high is 260 and it is sliding from 260 to almost 140 rupees. Okay, this is the weekly chart. Now, if you look at the candles, these down candles, the volume on these down candles is increasing. And the volume is greater than the previous one, right? This candle's volume is greater than previous candle's volume. Again, this candle's volume is greater than previous candle's volume, and this one is greater than previous one. So let's see what happens next. Now the next candle is also a down candle with increasing volume. Now the stock is trading at 130. It's almost 50% from its recent swing high of 260 rupees. The momentum is accelerating to the downside. Doesn't it look more bearish and scary? It looks as if this stock will never stop going down. Let's see what is. Wow, we get a green candle. Now the beauty of this candle is this candle has more volume than the previous down candle, right? Also, this is the first green candle where the volume is above average when comparing with the rest of the candles. And also, if you notice, this candle has gapped down and then it has closed on its high. This is not what we expected, right? When we looked at this candle, it was looking as if the stock price is going down, and we expected further fall. It is something opposite is happening to what we expected. So this brings our attention to this stock. Let's see what is the next candle. Now next is again a red candle with volume is slightly lighter. But at this stage, what do you expect? There are so many red candles. Remember, it's a weekly chart. It has been dropping for months, and after a green candle again we get a red candle. What do we expect from this? Normally we expect price to go down further, right? No. In this case, you have to look at it from a different perspective, because number one, volume on this red candle is lighter when comparing with this green candle, right? That means less sellers than buyers. Number two, volume on this down candle is also less than the volume of this down candle. Maybe a couple of thousand shares is difference, but it is almost the same. And number three, the close of this down candle is almost similar to the close of this down candle. I call this concept as comparative test. Price stops exactly at an area where there were more sellers earlier. Now again, price is going up and coming back and stopping at the same area with less sellers. That means supply has dried up. This is a sort of a test. Okay. Now, what do we expect the next candle to be? When you encounter a situation like this, the next candle would obviously be a bullish candle, because logically there are no sellers, there are less sellers in the same area when comparing with earlier move down. As far as the entry is concerned, can we enter at the top and place our stop loss at the bottom? No, it will be very naive to think like that, because the stop loss is huge, especially when you trade in futures market. So what we are going to do is we are going to get to the lower time frame, that's daily chart, and try to find an optimum entry for the stock. In this downtrend, if you notice on this daily chart, price has given a pullback. As it comes back down, it has still not broken the previous low. right? It is just sustaining above its previous low point, the swing point. So if it is not able to break this low, then that means it is stronger, right? So let's see what happens next. Okay, so what do we see here? Here we see next day there is a gap up candle. Okay, that is Monday, start of the next day. Now this gap up itself is a confirmation for us to enter. We don't have to wait for any other confirmation, so we can just right away enter when price gapped up above its previous candle's high, and we can place our stop loss at the bottom of this green candle itself. And where would our target be? Now if you notice this area, this support is becoming resistance here, right? So let me draw a horizontal line for you. This support is acting as resistance, so it's an area, it's a zone. So it is coming around 160 to 163. So I want to book my profits if the price reaches near 160 itself. It's a round number, right? So let's see what happens next. Next is a green candle with good volume. Okay, fine. Wow, a very big candle which is closing near its high, and proportionately very good volume too. So this shows that momentum is strong, very, very strong. Okay, next is also a bullish candle with decent volume. Again a green candle. Fine, our target is reached. We have exited this trade around 161. So profit on this trade is 24,700. Here is the entry proof. eudcom, thousands lot size. We entered at 136.30. Let me zoom a bit. So 136.30 we have entered, and let me show you. So we exited at 161. So we have made a profit of 24,700 on this trade. So friends, join our technical analysis class or advisory service or wealth management service and make money as a professional trader or professional investor. Again, thanks for watching, and see you in the next video.